Hello everybody, it's August 26th, 2022. We're going to take a look at Bitcoin's action here, starting with what I said on Monday. So last Friday I said the initial move down was likely done or would be very soon, and then we'd see a bounce. And on Monday we had seen that slightly lower low, but then we're in the midst of a corrective bounce upwards. So at that time, primary expectation was that the bounce didn't really look complete as of Monday, but we did need to consider the 21.5 to 22.1 zone another danger zone, because it really didn't look complete, but that was sort of the C wave area for that to go. And then the question was going to be, does it form a larger WXY correction to hit this ideal zone, which of course it has not at this point in time. We've seen a breakdown from there. So I'll deal with that, and that pushes us into in between two things. It could still be doing this just with this lower zone, or it could be doing this alternate where we actually have a fifth wave down into the 19.5 to 19.9 area first, and then we're going to get a larger bounce. So that is still a possibility that we're going to have to deal with. So a lot of stuff is still kind of up in the air right now, but regardless, doesn't really matter. I've been raising cash this entire time. As we were going up towards 25K, I was raising cash. I've raised more cash. At this point, I'm like 75%, 80% cash. So really, whatever the market does doesn't particularly matter to me. So the other possibilities that we had at the time were the old orange count, which I thought was quite improbable because of the breakdown below the channel bottom. And at this point in time, I'm going to say that one is just gone. That's done now, so we can get rid of it, which is nice. And then the red bearish count is something we always have to be a little bit wary of, that potentially this could be leading to a lower low. So that's pretty much what we're going to be going over, is essentially if we're already in the C wave of a correction, or are we in wave 5 of the A wave, which is this alternate scenario, or are we in this more bearish scenario where we're going to see a new low? So let's go over those different things, starting with where we are right now. Bitcoin, unfortunately, really did not give a strong move off of the low. I would have preferred to see it move higher into this box. Now, there are other reasons that I'm considering in the market, the larger market. Like a lot of the altcoins actually gave much better 5 waves than Bitcoin did. So I have to take that into consideration. But the fact remains that Bitcoin did do the minimum required to be 5 waves. This can count as 5, hitting this box, even though I prefer to go larger into that box, higher into that box. It is technically a 5-wave move, and it did the minimum required for that. So we can certainly see this now hold. This green box here was our larger second wave support box. So that means this 5-wave move is wave 1. What we're seeing now is wave 2 as the primary scenario still. And again, a lot of that has to do with some of the altcoins, which look way stronger than Bitcoin, leaning me in that favor. Now, the question is, between the primary scenario I had on Monday and the alternate scenario I had on Monday, is this going to be A, B, and C, like this, and then we go up? Or is this all part of A, 1, 2, 3, 4, 5, and this is still part of A? That's what this orange box is here. So we could see this all be A wave, then a B wave, and then a C wave down. That is still very much a possibility. And I cannot really tell you what the most likely scenario is at this point in time. We are just going to have to kind of wait and see, and that's one of the reasons you really don't try to play corrective action on a short-term basis, because it's just so incredibly variable. So for now, I'm just going to assume that my primary expectation is correct, where this is all A, this is B, even though it didn't get to the ideal situation, ideal area here, we'll call that just a shallow B, and then a C wave down. So that's what I have here on this yellow fib extension. We would be looking then at an area between 17.2 and 19.4 as the ideal location for this C wave to bottom, with about 18,000 being the ideal 1.0 extension, where C is going to equal A. Now obviously that gets a little bit problematic because we get kind of near to this low that we had before, which is about 17.7, 17.8, something along those lines. So 18K is really quite low. And then we sort of get into the situation where, okay, does that just count as a double bottom? Maybe we get a double bottom, and maybe then we get a much better impulsive move. That would actually be kind of preferable to this anemic diagonal that we got here. So that is certainly a possibility I need to take into consideration. Even if we break that 17.7 just slightly, it doesn't necessarily mean we're going to break down to a new low based on this action. So what am I going to look for along the way to kind of indicate whether that's going to be the case, or we're going to get a lower low, meaning this, all of this was the red scenario, W, X, and Y, and then we're going to a lower low? And the answer to that is that essentially whatever ends up happening here, either the bottom is already done in the A wave or the first wave here, or the A wave or first wave ends here. Either way, we'll be able to draw a fib extension, and let's just assume that was the bottom right there of what we can call a first wave down. I'm going to try to explain this the best that I can. Basically what we would then see is a first wave in the third wave would go to the 618 at about 19.4. We'd then get a bounce to the 382 at about 20.3, and then we'd get a strong breakdown to 17.2. That would indicate that this is 1, 2, 3 of 3. We'd then get a little bounce up into this 18K area again, and then a final move down to about 16. This would be a very bad sign and would push me towards expecting that we will then get a bounce to about 18K, but then we'll break that low and we'll go down to 14.8. Okay, so it really does depend on doing that almost exactly, because that's the only way that this can form a structure with the foundation in place to actually break a new low. Right? So that sort of thing, where we're getting those bounces, we're getting the first wave and the second wave and the third wave where we expect them to be, would indicate a new low. If instead this simply progresses downwards, or gets, just minor kind of bounces along the way, we don't actually get those full like 618 to 382 moves that I'm talking about, then, if this just extends sort of to that 1.0 area at 18K, then we're going to be in that situation of saying, yeah, this is very likely just ABC corrective action, and we're going to go up from here. This is all first wave, that's second wave, and we go up in the third wave then. So important, like I said, to just kind of keep an eye on this micro action, see what happens. Do we get that bounce around 19.4, and then what does that look like? And this orange box here is for this alternate fifth wave. So again, that's still a possibility. That might complicate things. I'm going to get rid of that fib extension there for a second. So the reason that might complicate things is because then this would all be either a first wave or an A wave still. We would then get kind of a larger second degree bounce, and maybe that actually brings us up higher than this area here. But then we would be looking to confirm either a bearish scenario or a more corrective scenario with that new fib extension. So if that sort of thing happens where we just bounce from that orange box and we end up making a new kind of local high in the 22K area, we would then have a new situation we need to keep an eye on, which again, if this is going to be an ABC, leads us down kind of problematically into the 17 to 16K area, or even more problematically, would go first wave to 618, second wave to 382, big crash down to 16.3, bounce up into the 18 area, and then down to 14.8. So we could see that scenario play out still if we get this kind of alternate and then a larger bounce. That's still a possibility. So at this point in time, I do have to caution that there is danger. I don't think it's the highest probability based on the micro action, and we'll zoom in here for a second and look at the micro action as well. But based on that, I'm not too concerned about that, but it is a possibility. So just to hopefully clarify things a little bit here, I think either way I'm expecting at a worst case scenario in my primary expectations that we get sort of this double bottom area and then we still go up. But in the worst of worst case scenario, we should see warning signs, meaning we see those bounces and that foundation being built of seeing a new low, in order to let us know that maybe this isn't the best time to be buying. Maybe there's going to be a new low. The macro chart still heavily leans in favor of this going up to 100K still. So I just want to put that out there as well. All right, let's go down to the micro real quick and take a look at what we have and why I'm not super concerned at the moment about this pushing to new lows. So our micro high was right here, right about 21.9. If you remember my video on Monday, I said it should hit at a minimum 21.9. So hit that exactly. You can see this little fake out pump that we had earlier this morning came almost back up there. So this does not serve well as a 1 and a 2 for an impulsive move down. And so that's one reason I don't believe we're actually getting the red scenario where we're going to see a bearish breakdown. This action, number one, that's 3 waves to start off. Number 2, this second wave came up way too high. So those 2 pieces of evidence right there lean me in favor of either finding support here, which I think is unlikely as well based on this action, or finding support somewhere in this larger green box. And again, 18K-ish is the ideal area for that to hold, but it could hold higher. Anywhere in that larger green box is fine. And this is, because we're getting 3-wave moves, this is probably A, B, C of 1. Here's our second wave. This could be considered A, B, C of 2, or 3 rather. Maybe it goes down a little further. Maybe we get an ABC up in 4 and an ABC down in 5. This could make sort of a diagonal or an ending wedge into that 18K area, basically, to push down a little further, but it's still not particularly bearish, meaning we don't have an impulse. And either one of the scenarios where we go to a lower low, I would expect to see an impulsive move form downwards, and we just simply do not have it on the micro time frame. There's not any way I can consider this to be impulsive. That is clearly 3 waves to start off this move. So for now, I remain firmly in the bullish camp in the long term. However, as I've said, I use this opportunity right here to raise cash. I used this opportunity to raise cash, and when I saw this breakdown earlier today, I raised even more cash. And so I'm now, sitting on profits, especially in alts. I have increased my portfolio significantly, and I'm now mainly in cash anyway. And I'll plan, I'm going to let this progress a little bit further, but I do plan to very likely buy down in this 17, 18, 19K area once again. And likely I'll be buying even more of some of the key alts that I've been watching. as they proceed downwards, because as I've mentioned before, they actually look more bullish than Bitcoin does. Now that's not all of the alts. There's plenty of alts that look like complete crap, but there are about half a dozen. Let me see, 1, 2, 3, 4, 5. Yeah, 6. In fact, there's 6 exactly that look pretty decent and have nice 5-wave moves off of the low. And I'll be increasing my allocation to those when I put my cash back in, and decreasing slightly my allocation to Bitcoin, simply because this has not been as bullish as those alts. All right, so I think that pretty much sums it up. We'll see where we are on Monday. I do expect, as I said, that we'll see lower, at least into this sub 20K area here for this alternate scenario, but more likely the weekend will hopefully just bring us kind of a more direct move down into that. I'd love to see like 18.5 or something. That would be great. And let me just do one more check here. This is, the bottom is right there, top is there. If we could hold above 18.3, that's the 886. If we could hold this correction above that, this can still be considered a 1 and a 2. But like I said, we could absolutely do a double bottom, or even slightly break the bottom in that 17.7 area, and then start off a new impulsive move. That would be fine with me as well. But we just have to kind of wait and see. In either case, I think kind of waiting around in cash, maybe accumulating small bits here is good. And 15.7 is really my line in the sand, as I've mentioned before, for the macro chart. As long as we're above 15.7, we still have a shot at that 100K plus area for Bitcoin to finally end this bull run that we've been waiting to end since the bottom in 2018. All right, everybody, you have a good night, good weekend. Hit subscribe on the channel. You'll get the updates. Check out the video, which shows just how right I am, how many times I've been right. It's crazy how right I've been. I really should start doing videos where, I do like the photo of myself screaming like, oh my God, what's gonna happen? Like so many other analysts do. Maybe I should do that to get more of you to watch. But in the meantime, watch this video showing just how right I've been. And hopefully I've prevented some of you from getting completely wrecked by this move down. It's not something that should be a surprise to anybody. All right, guys, I will talk to you on Monday.